Walmart announcing plans to offer grocery delivery in 100 cities by the end of the year, to former Walmart CEO and president Bill Simon on whether Walmart can actually compete with Amazon. Thanks for joining us, sir. Walmart has really come back a couple of times in this sort of battle against Amazon, but more recently, lower sales on their online division sent the stock tumbling, and a lot of people saying that's it. Is this one of the solutions?
I think Walmart's doing a great job executing the strategy that they designed several years ago. They put a lot of money, time, and energy into developing their online business, and they're headed in the right direction. Now, whether that's going to work or not still remains to be seen, and it has come at a really, really steep cost. 2014-15, their operating income was about $28 billion. In their last report just a month ago, their operating income was down to $20 billion. So $8 billion a cost to drive that e-commerce sales. We'll see if it works.
Well, they made the acquisition of Jet.com, which most folks applauded but didn't think was enough. A lot of this, can they do it all organically, or should they become more aggressive with respect to some of these acquisitions to really jumpstart themselves into this battle?
Well, I think they've been aggressive. They've bought several online retailers and they've integrated them very well. The question is trying to get to that scale and then to get that Amazon magic. The magic that says you don't have to make any money, right, that as long as you're growing your top line, everything's okay. And if that rubs off on Walmart, I think they'll be fine. If it doesn't, it's going to be challenging.
Yeah, I mean, Amazon doesn't have to make money. The only place it does make money is on their cloud business. And you're right. Wall Street still loves it, and they still afford them this amazing market valuation. It has stopped doing that with Walmart a long time ago. What about the omni-channel platform? It feels like more recently a lot of retailers have been able to successfully sort of integrate that, whether it's, you pick up at the store after you've ordered online while you're at work, maybe even start delivering more products, even beyond groceries, which we know have razor-thin margins to begin with. Is that the ultimate solution?
Well, it's one approach. If you look at Costco, for example, they've decided they're just going to be a heck of a good retailer and deliver on their core promise, and they're doing a really good job and having pretty good results with that. Others have integrated e-commerce and the physical stores through omni-channel offerings and done a really good job. That hasn't really worked in a lot of cases from a financial perspective. So it's really challenging. Amazon has set this bar. Others are trying to chase it, but they don't have that magic fairy dust that says they don't have to make money, and they're punished for it.
Yeah, Bill, of course, I remember reading when Sam Walton was alive, him saying Costco was the only store you really couldn't take down. And I think the closure of all these Sam stores kind of underscores that fact. So they have found a unique niche within the brick and mortar retailing where they've been able to sort of escape the Amazon effect. What about that? What about Walmart getting back to its knitting, to being a great retailer that draws people into their stores?
Well, there are a lot of good examples of people who've just executed their business model really well. Costco's one of them. I think in restaurants, Darden and Olive Garden is another good example of just really, really executing well. Dollar General's done pretty good. The whole dollar segment is still pretty buoyant. I think there's a lot of market share to be gained in brick and mortar retail. Walmart made the decision to go in a different direction several years ago and is executing that strategy. They're committed to it. They've redesigned their board to deal with it, and we'll see if it works out for them. But they're executing. They're doing exactly what they said they would, and they're doing a good job of it.
Yeah, unfortunately, though, and I'm not sure how patient the board will be with the sinking stock price, but it feels like the bar is set substantially higher for them for quarterly results from online. I see other retailers that are doing 20% year over year being rewarded. That's not going to be good enough for Walmart.
Well, I think Walmart set the expectation, or really the street set the expectation, that Walmart would have Amazon-like numbers. And the minute they didn't, they got punished for it. And that came as well with declining gross margin and lower operating income. And I think a little bit of reality set in. That doesn't mean that they can't do it. It just means that it's going to be difficult and it's going to be expensive.
Bill, I want to just ask you about this morning. Retail sales numbers were out. They missed consensus, but within the number, I saw some pretty bright spots. Building and supplies were up huge. Clothing, despite the inflationary pressure on apparel, up pretty big. Restaurants were up higher. You just mentioned Darden restaurants. Are there some signs that consumers are beginning to step up to the plate and feeling perhaps a little bit more confident with their spending?
I think so. You're starting to see that. Consumer confidence is up, consumer spending is up. You know, there's still just so much noise politically and economically and in global affairs that I think that there's still a little bit of fear and trepidation in the market. But you're starting to see people, as the money hits their wallet from the tax cuts and their paychecks, starting to get a little bit more aggressive in what they spend. I'm pretty encouraged, absent some large catastrophic event, that we're going to have a really good year in retail and restaurants this year.